All right, bet. So this will be the full breakdown of the fibs with a little bit of psychology. All right. I
Hmm.
don't know how long this video is gonna be, but I'm currently in a one-on-one with AJ, and let's just get it started. So when it comes to the fibs, we have two different Fibonacci's. You have a don't worry about my placement right now, just worry about the direction. You have a bearish fib that starts from top to bottom, okay? That's just an example. And we're gonna have two templates, and you're gonna always put it to bearish fib if you start it from top to bottom. That's one, okay? Or if it's a bullish fib, you're always gonna start your fib from bottom to top, and you gotta do your second template and do bullish fib, okay? Your resistance or your premium should always be above you, and your green, your discount should always be below you, always. All right, that's number one. So you have to get that down pat first. You have to understand Fibonacci placement. Now, for the video, I'm going to just click this. Hold on, give me one sec. Hold on, let me fix my mic. All right, can you hear me?
Loud and clear.
All right, bet. How to fix my mic. All right, so like I was saying, with your fibs, I'm gonna double click the fibs so that the people in the video can look at the settings so that they can just take a screenshot, and you'll have the recording also. So for your bullish fib, do make sure it's bullish. These will be your Fibonacci settings. Okay. Just like this. Just like this. Everything up here as well. Cool. And the same thing down here. Boom. 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 Cool. Now, for your bearish fib, boom. These will be your settings. Just the same as that thing, just inverted. Same as here. Boom. 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 These settings right here. Boom. 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 Cool. Now we got that down pat. That's number one. So now you have your bullish fib and your bearish fib, and you also have the settings for them. So that's just the core mechanic of how to actually apply everything. Boom, that's said and done. Now let's talk about ranges. Okay. Are you follow? Let me know. Also, let me know if I'm going too fast or if you have any questions. Just stop me and I'll solve it. All right.
No worries.
All right. Perfect. So you have something called ranges, all right? And how to identify our ranges for our fibs? We look at the most recent swing high and swing low that is above and below the current price action of the current market in a sense. So for example, the two levels that we see that are inside of price action is this low and this high. Everything in between is price action. Okay, so we know that these two, this high and this high up here and this low down here, is what governs everything in between, meaning that is our equilibrium. Everything inside will align with our fib. So if I take my Fibonacci and I draw it from my low to my high, and I make sure it's my bullish fib, everything will make sense. Why does everything make sense? Let's break it down. We always sell from our premium and we always
Hmm.
buy from our discount. We always,
Okay.
not always, but 80% of the time we sell from the top of our discount and we buy from the bottom of our discount. And you see that I always buy low and I always sell high. That is your direction model. A lot of people have a great entry model, but not a good direction model. You need to understand direction because you can have a great entry, but price is already in the premium and you're trying to take a buy and you lose it. Or you could be trying to take a sell and price is already in the discount. It's a great entry, but you lose it just because the nature of the market is not aligned with your direction. Understood?
Hmm.
So this helps with that. So now you're looking for Fibonacci levels at your 236, 382, 618, and 786, as well as the spaces in between, but we'll get into that. So entries like this occur. you know, where you drop down to that 15-minute time frame and you reset your chart. Boom. And all you're waiting for, you can take breakouts and retests of these levels in the direction of the trend. I'm gonna say it again. You can take breakouts and retests in from these levels in the direction of the trend. Meaning, you could take a breakout or a retest of the 236. You could take a breakout or a retest of the 382. But once you get to the 618, you want to buy it. And once you get to the
Okay.
786, you want to buy it. Got it? Cool. Now, if you're starting from discount, it's the same exact thing. Break and retest, buys. Right here, break and retest, buys. But as soon as you hit here, you low key want to start looking for sales. And here you want to start looking for sales. That's what you call that's like order flow. It's a natural mathematical order flow. And it's asymmetrical, but they align on both different perspectives of a bullish and bearish trend. That's why the Fibonacci works. So right now we're looking for a retest of our 236. So you can either A, so a lot of people they be wondering like, yo, how do you actually catch your entries on those lines? Very simple. We place limits. So you'll have a limit here. Boom, just like that. You could have already taken this breakout. You can scale down to the 5 minute time frame if you would like. These trades hit, but I like to take resets. That's more of my thing. So we have a retest here. We're waiting for it. We're waiting for it. We're waiting for it. And you're just gonna wait. That's all you're gonna do. Boom. You got your retest. All right. This retest, you got your entry at 6:45 a.m. on Tuesday, November 4th. 6:45 a.m. Pacific Standard Time. So that's 9 a.m. Eastern Standard Time and 8 a.m. Central Time. So that's when we got our entry. Now, you may be wondering, like, damn, where do we put our stop loss, right? There's always a level to put your stop loss, either a Fibonacci level or a swing high and or swing low. And if you look, there are no swing highs. The only swing high we have is up here. And it's like, damn, that's hella
Yeah.
far, right? So what you do
Yeah.
is you draw another Fibonacci from top to bottom. Boom. Make sure it's your bearish fib. And you put your stop loss at the 50%. You have two options. You put your stop loss at the 50%. I'm just gonna eyeball it for right now. That's what I usually do. Let's just say the 50% is approximately here. Let's just say approximately. To get the official one, you can low-key just draw a box with a dotted line. So you can put your stop loss at the 50%, or you can put your stop loss up here. It's all up to you. Me personally, I will have my stop loss like around here. And then I always drag my stop loss down as I go. You just always want, at the moment you enter a trade, you want to give yourself enough breathing room for the reaction because you are not the best at the timing. You only see price action, which is what's causing the action of the market. It's hard for us to determine when it's going to happen. So the only way for us to align the entry with our with it wanting, how would I say that? My bad. How do I align the entry with the timing? And the only way that you can really do that is by giving yourself some more breathing room because you don't know when the trade is going to trigger. So that's what I always love to do. When that trade starts to go on profit, I can then always bring my stop loss down. So this is the trade. Now, what am I going to target? I always target a 1 to 2 or a 1 to 3. Usually a 1 to 3, but you can always target a 1 to 2 as well, whatever you choose. And this trade may look like a big trade at first. But when you put the box on it, it's actually not like a really big trade at all. It's a pretty normal size trade, surprisingly, isn't it?
Yeah. Yeah. You're right.
Because like at first it looked kind of big, but then it's like, wait, it's actually not at all. So this will be your trade, and this will be approximately your take profit. You're going for a 1 to 2. Hold on. If you go for a 1 to 2, boom. This is your trade. Simple. You're risking 136 bucks to make 285. I'm not really worried about the risk amount. That's not what we're talking about, but just to throw it out there. Boom, that's your entry. And you're gonna hit TP. That's your first trade right off the 786. Now, what do you do next? It's like, okay, I caught a trade off the 786. What do I do now? All right. Now, here's where you gotta add a little bit of experience into the equation. Let me know if you're following me. Am I going too fast for you?
No, no, it's
Oh,
okay.
okay. Bet. Um, this is where you have to have a little bit of experience into the equation, and I'm gonna give you that knowledge of experience that I have so that you can just grasp it early. Um, so you're gonna continue to take trades off of this level until price taps this. So
The 38 point.
if price stays in the space in between before touching the 382, you're gonna continue to take trades here over and over.
Okay.
Hold on, let me see. Clone. Yeah. However many times it presents itself, you're gonna continue to take it. Why? Is because we are mechanical. This trade can hit TP, then it can come up and hit TP again, then come up and hit stop loss. But by then, you just hit two trades back to back and you took one L. You already up 4,000 on the day, right? Simple.
Yeah.
So that's what you're gonna do. But if price taps this, then I'm gonna show you. So boom, we got a tap, right? Scale to your higher time frame. Once you scale to your higher time frame, you just want to analyze what price is doing. Why is price tapping in this region? I'm giving you the whole structure of how I look at price. I'm not just telling you how the fibs work. I'm not just telling you, oh, I'm not just showing you trades and TPs and rejections. I'm trying to show you how to work them, how to use them as a confluence as well if you're doing it with other strategies. You want to use price action to your confluence. So if you see that price, there's no support here or anything like that, then you can anticipate for price to come down to here.
Yeah.
All right. So that's what we're anticipating. That's not saying price will come down to here now because we don't choose that. That's why a lot of us lose trades because we think, okay, if price has to come down here, oh, it's going to come down here right now. And then you get into a trade. Even if you hit TP, it's not about winning and losing, it's about probability. You want to put the probability in your favor. It's not about winning. I can win a trade now and win a trade tomorrow. They're going on a crazy losing streak. You want to do what's sustainable. You want to do what you can do consistently. You want to do what's maintainable. You don't want to just do what's accessible, obtainable. You don't want to just do what's for right now. You don't want to just hit that trade and win that battle. You want to win the war at the end of the week when you look at your P&L and get that damn payout. So this is how you operate. And this is how you operate in that. So we're seeing that we have rejection here. So we know that we have a pull to this level. So you have something. Let me add this to you. Let me show you this. Let me add some price action. Boom, right? So let's say this is our price action. And we have some lows here that need to be retested. Cool.
Hmm.
But let's just say, damn, I gotta kind of do it a different way. Hold on, wait. Let me do it like this. Boom, 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 boom. Hold on, let me just let the price action lead up. Boom. Right? So cool. Let's say you have price that breaks a low. Okay.
Yeah.
And this is so good because this is incorporating Romel's tactic, how Romel trades and stuff. And you see that price breaks these levels. And let's just say, for example, let's just say, for example, you're looking at price. Let's just make it like this. I just want to make it a line. Just so it can be a good example so that you understand what I mean. So cool. Let's say that these lows, because it happens all the time. Let's say that these equally leveled lows are at our 618, which happens literally, like I said, all the time. And we
Yeah.
know why price did it because we have rejection here. And we see that price broke this. And we're like, okay, we're waiting for a retest. I know it may be sound a little contradicting because I said I only buy from down here. Hold on, let me make sure it's my bullish fit real quick. I only buy from down here, but I know this example is selling, but we do take sales here every now and then. But this is just a really good example. So, um, there. Let's just say we're trying to take sales, price went ahead and broke, and we're trying to take sales at our 618. And we're like, damn, okay. We're trying to take sales at our 618, and we have an inducer. That's what I call it. It's a inducer. Meaning if price comes here, it's most likely going to what? React, right? It's gonna do
Yep.
something. We're gonna get some type of reaction. We don't know how far it's gonna go. We don't know how low it's gonna go. We don't know when it's gonna stop. We don't know anything. But how, uh-oh, damn. But how do you determine where price is gonna go? You look for a gravitational pull. You look for something else that'll pull price down to hit your take profit. You look for something else. So now let's incorporate Romel stuff. Romel would say
So would
something
that be
like
like a gap or a
a,
order block or something?
a gap or something like that, right? Exactly. So Romel, if he's watching this video or someone in here that does watch Romel stuff, and correct me if I'm wrong, in the comments or something. But Romel would have like, this. Be like, yo, gap. This is a higher time frame order block. He's waiting for the retest of the 50% right here to buy higher. And then let's say he has a more internal level specifically right here for a reasoning why price should buy right there. That's how Romel be doing. I be seeing him doing this a lot of times. So I'm like, okay, bet. So if you're doing that, what does that also align with? That also aligns with your 236. I mean your 786 to buy higher. And you can also sell this. So what are you going to do? You're going to have a limit right here because why? You know that this is an inducer. You know that this is going to push price most likely down. Okay. So you're going to have your stop loss and you're going to have your take profit. Boom. Go for a quick 1 to 2 and take your trade. Simple. There's no reason, like, if this trade ends up being a loser, don't beat yourself up. Why? Because this is a good trade, is it not?
Yeah,
You have
yeah,
a
of
reason
course.
to
Because
sell. Go ahead. What you say?
yeah, it's a good sell, and then we're ready. If we do lose it, we're ready at the bottom at the premium to take it back up if we need to at some point.
Exactly. We could take it right back up. So we have an inducer here to push price down, and then we have a gravitational pull to make it hit TP that'll literally push price up back in the same sentence. So what do we get? We get a reaction, boom, some drawdown. So that's the
Hmm.
retest, boom. But then here's Romel. He waits for the second raid. We get the second raid, boom, TP straight down. But then as soon as price hit TP, it literally happens all the time. Price will sit here, hit TP, wick out. We already in our buy because we know we buy from our 786 all the time, no matter what.
Oh yeah, yeah, yeah. That limit
You-
order is going to be there, isn't it?
yeah, and you may be wondering like, damn, where am I gonna put my stop loss? Here's what you do. You make sure you place your TP at the most obvious level where price will reject, which is here. And you just put your stop loss on 1 to 2 of that. Boom,
Perfect. Got
perfect.
it.
Perfect stop loss. Perfect trade. You hit that trade, you go on a little bit of drawdown. Cool. Price comes back up. It fluctuates, but we're not breaking any lows. Fluctuates. Boom, boom. Liquidity sweep. Bow. Retest. Bow. And this was just a long trade. And this is literally how it plays out. And this would have been a longer trade. This is how it realistically plays out, bro. And then
Yeah.
and then price will retest here, come right here, which is the 50% space in between, which aligns exactly right up with this, and then do what? Bing, ping pong.
Oh,
Come back,
yeah.
bing, ping pong. Come back, bing, ping pong. And then Price just literally does this all day like clockwork. The way I just drew this out, doesn't it not look like realistic price action?
It does. It literally
This
does.
is literally how like I've been doing this for so damn long. I literally know how to draw out realistic price action. Like, this shit is not cool, bro. I've been doing this for too long. This is literally how the market moves, and this is how the fibs work with it, actually. So my bad for going on that long rant, but this should really explain it to you visually how we express the fibs. And then, like for example, like while we're back up here at our 382, we know we have rejection here. So we like, all right, bet. Okay. What we gonna do? Instantly, we don't care. We sell.
Yep.
382. And then it's like, okay, let's say we sell and we gained a little bit of profit, but price came down to the 50%, stopped us out, retested, came back up to the 786. What we do at the 786?
So,
We sell. And then what price do? Hit TP.
hmm
And it's just a market cycle, over and over and over and over. And we're hitting trades back to back to back. And then I didn't even express these ones. I didn't even call these out. But bro, if buys off the 618 if you wanted to take them. Like price, I didn't even think about that. But like Price literally does this all the time. Or Hey, damn, wait a minute. Fucking sales at our 382. Once again, I didn't even see that. Or boom, wait, sales again at our 236. And you just see how this looks realistic. And it's like, whoa, if I went ahead and took off every fib, the fibs make sense. And this isn't even real price action. Now watch what happens when I take all this off. This shit look like, why is price doing this? You don't know. Like,
Literally.
it's like your eyes, it's like you're blind now. You're
Yeah.
completely blind. But as soon as I take one of these from my perspective and I draw it out, instantly, what do you see? You see, oh, snap. Oh, snap. Boom, boom, boom. And then everything just makes fucking sense. And now you turn into a mechanical trader and you understand how the market moves. Then you don't even have to use the fibs, man. That's the crazy thing about it. If you don't even want to use the fibs, turn the fibs down and just use the direction model. So if you want the fib, if you want to use the fibs, turn them up so that you can see them. If you don't want to use the fibs and you just want to use the direction model and you want to like, let's say come here, let me just go to the settings. And you want to turn the bright, you know what I'm saying, the opacity down just to, you know what I'm saying, have it there. And you know what I'm saying, you do your own
Yeah.
price action, fair value gaps. Bro, it's gonna align. I promise you. So, yeah. Anyway, let's get back into it. We didn't, that's not even real price action. All right. So look, 15-minute time frame. We looking for sales at our 236. We always do. You can also buy your 382 if you wanted to, but we don't have anything here. So let's just let price play out. I don't know what I really don't. I know we already played through this price action, but I still don't really remember what price gonna do. Cool. Why is this dotted line here? So like even this right here, is this the 50% of our auction zone? So price just corrected.
Close.
So yeah, it might
It's
almost it
close.
might almost be, yeah. So this is the price just corrected. This was the indication. Price never corrected. It finally corrected. And then from that correction, it almost retested our 50%. It didn't though. Wow. Come on, man. Bro, I
That's mad.
you know what I'm
It's
saying?
crazy.
Like people can still take those entries. Let's see if you would have taken it, would have hit TP though. Yes, it would have hit TP, of course. All right, cool. Boom. Now imagine taking sales from the 382. Imagine. Like just I'm just throwing it out. Imagine a 5 minute sale, 5 minute time frame, sales from the 382.
Yeah.
This is it's multi-purposeful. You can use the fibs any time frame. You just have to make sure your ranges are correct. Like nobody can tell me sit here and say, oh, this trade, where's my stuff at? Didn't hit TP. As soon as you entered, okay, where do you put your stop loss? Look to the left, swing high, bet. Stop loss goes above the swing high. What do you target? A 1 to 2 risk to reward. 1 2 2. Damn, it would have been damn, yeah. Ended up it
There
hit
you go.
TP. But boom. And guess what? That's not even the best part. The best part is you got two options. You got two entries. This is why we
Oh
take our
yeah, because when it
trades.
when it comes back up, you take it again.
If it comes back up, do I take it again? Yeah and no. It depends. So I'll explain it. I'll explain and show you how to determine when. But let's just say realistically, like let's just say like yeah, let's just say you did. Because mind you, let's say you made 600 right here, 600 right here, and lost 300 right here. You know what I'm saying? You're still up. Come on. So
Yeah.
let's say you took
Yeah, yeah,
like
definitely.
okay, boom, stop loss. Boom. But you just had two trades that hit TP. Cool. But guess what? I wonder what happens if you take the retest. Stop loss below this swing low, targeting a 1 to 2. Let's just see. I genuinely don't know if we even get a retest. Retest. Oh, wow.
I'm mad.
Crazy, bro. Yes, it hit stop loss, but does that make it a bad trade?
No, no.
If I had a little bit more breathing room, if I just had a slightly like a tiny bit more breathing room, or if you're someone like Romel, where you need the detail, you might have had like this fair value gap marked out, and you would have been like, yo, stop loss here. I'm hitting this trade. I got a lot of yes. I'm gonna make it a 1 to 3. I'm gonna just make this trade a 1 to 3. It's gonna be a big trade. based on the 15-minute time frame off of a 5 minute fair value gap in confluence with this 382 buy. Price just flipped it. Bing, TP. Now guess what? Price coming up to our 236 again. What do we do at our 236?
Sell.
Sell. Exactly. So let's take that. Same exact trade, same exact everything. Boom. Stop loss here. Take profit here. You execute. Okay. Like clockwork. And you let price play through. Bing,
That's
TP.
mad.
You just replay the same BS every damn day. And this is why, let me go look. This is why in the Discord, hold on. Somebody said, somebody said, taking what I've learned from Romella and Zeke, I was too afraid to take this trade. Still working on my mental. Stay in the game, y'all. She must have took a breakout. Or she might have took this sell from the top of here, the tap. I don't know how she marked it out, but cool. Anyway, trade history. We traded live today. Are you a VIP member? I mean, or a priority member?
Yep.
You probably okay. Were you in the live this morning?
I was on your call. I did see you take them trades earlier. Yeah.
Okay, yeah, we hit today. We've been hitting every day. Hit today. We're overall 11-11 for 2 weeks. We hit two trades today. We took a sell from our 618. Sell from we're on a real small time frame. Price was hella choppy. We took a sell from our 618, 1 to 2. It literally ticked it. I ain't gonna lie, I got lucky. If my entry was just a little bit later, I would have missed it. But shit, TP. Boom, price flipped it. I just used that same level with support. Boom, TP. It was just two. I took them live. Um, and that was just that. Yeah, this was the trade. And then before then, took trades here. Smack. I'm not gonna go through all of them, but where we've been hitting. Anyway, so the
You know
fibs
what?
work.
I've been trying to make sense from these screenshots because I know you post them all the time. I've been trying to make sense of what you've been doing. But the way you've explained it now, it all makes sense now.
It all makes sense now, yeah.
Yeah.
So do you think we're gonna keep going? We're gonna keep the one-on-one going. But do you think if we ended it here, you'd be better off and you'd be good, like you'll be okay.
Oh, 100%. But you carry on. You keep
For
giving the
sure. If
sauce, mate.
I'm gonna carry on. I just want to know. I just want to
You carry
understand.
on.
Like, okay, bet from you understanding that if we had to cancel the one-on-one right now, would you be able to implement the fibs? And you was like, yeah. So that's hard, but that's what's up. That makes me proud. That's fire. But let's keep it going. So let's go ahead and leave price. Let's go to like current price action. So I just want to give you some examples of some entries with the fibs or whatnot because markets. I would give you a live example, but obviously the market's not going to be moving crazy right now. It's later in the day.
Yeah.
So I just wanted to show you some examples. If we were live, you know me, I'll trade live instantly. It don't matter. But 4 hour. So like I said earlier, when it comes to market on ranges, this is what you do. I don't know what this candle is, but we're gonna ignore this. Actually, what we're gonna do is we're gonna go like this because that candle's fucking me up. Okay. I don't like that candle, bro. It was finna break out the range. It was finna make everything not make sense, and I gotta just explain it a different way if that candle was like that. Anyway, we're gonna make sense of that though. We're gonna make sense of it. But anyway, you can draw out price action. Hold on, let me look at this. Let me look at this. We got 6 minutes left on this video for this one video. And then I'm gonna end the video here, and then we're gonna continue your one-on-one in like 6 minutes. All right.
Sorted.
Okay, perfect. So I don't want to give all the sauce on YouTube. Um, so so um you got your ranges. You have the main range, which is from this low to this high. But then you also have ranges inside of that, like from current price action, from this low to this high, right? Or
Mm.
from this low to this high. You know what I'm saying? There's always ranges inside of ranges inside of ranges. That is Romel's concept. I got that perspective from Romel. The original way I used to draw the fibs was from the week, and I'm going to explain that, but I'm gonna get into this because this is what everyone's trading. So let's just do it from an example from the main perspective, which is from this low to this high. So you're gonna draw your fib from bearish. Oh, hold on, damn, where's my stuff at? There we go, my bad. bearish, bullish from bottom to top, make it a bullish fib. Cool. And then let's just scale down and look at the levels that we have at. Like, look at this sell. Like, this just happened. I don't know what this was, if it was news or what it was. This is fuck that. Yeah, let's just go to current price. I'm gonna make sense of it. There's no point to show it now. Like this entry, imagine taking the 50% of the auction zone.
Perfect.
Perfect. It's all like this is just now. Imagine having a limit at the 50% of your auction. Or imagine having a limit. Oh, well, it didn't tap. It didn't tap it. But I was gonna say, imagine having a limit at your 618. Like price almost tapped it. Imagine catching that. That's boom, one trade. This trade right here, this is generational wealth. Like if somebody caught like this is OD. This is straight down. You know what I'm saying? And then here's the funny thing about it. The funny thing about all of this is like I wouldn't be surprised if price bought right the fuck now. And the reason I say that is because
50%, isn't it? So the
exactly
50%. Yeah.
it didn't retest it perfectly, but guess what it did do? Guess what it did do? I'm finna tell you. Price never retested none of the 50% here or here. So both of these are both invalid. These are invalid retests because it did not fill the 50%. But price finally filled it here. First, second raid entry.
Second raid, yeah, yeah.
I wouldn't be surprised. I wouldn't be surprised if price do dump. It do. Then okay, fine. Like I'm not a fucking genie, but like, hey, but like, I'm not a genie. I'm still a human. Like, but look, like this, the reaction you're gonna get is gonna be you're gonna get a reaction. So like, you just imagine taking some type of trade. I don't know. We might you seeing how bearish it was, but then look how choppy it starts to get once it hits the 50%. Why is it getting so choppy all of a sudden? Like it's been bearish, and then as soon as it gets to 50%, it buys up, comes back down, but buys up again, comes back down, now fails to break this low. Boom. We're sitting on this low.
Order
Like,
block recreated.
yeah, and then we're sitting on this low, and then we have this high up here. Cool. And then now look, here's the crazy thing about it. Let's delete the fibs. And let's draw an even more internal fib because trust me, you can do it like this. I promise you. It's crazy. Draw your fib from top to bottom. Boom. Make sure it's bearish. Your bearish fib drop down to your 1 minute time frame. Don't nothing change. It's the same damn thing. Same damn thing. You want to buy from your 236 and you want to sell from up here at your 786. So just imagine I'm the only reason I'm saying imagine is because I'm not actively doing it, but I actively trade like this. You take a trade at your 236. This is a 1 minute time frame. You literally had from the creation of this low, you had about, bro, you had all this time. Let's say you didn't notice it till right here. You had 1, 2, 3 minutes to take this whole trade. You could have took this trade from here to there. Like people actually trade it like this. People will trade it like this. When the fibs get public and the fibs get live and they get out there, I low-key didn't want them to get out there. But in the fibs get out there, people are going to scalp like this. And the reason I say that is because I don't have a 15-second chart or anything. But I can go to a tick chart on my account. But people will take trades like this and literally catch 1 to 2s. Look, that's not even a 1 to 2, that's a 1 to 3.
23. Wow.
Catch 1 to 3s just like that. And guess what? You know what they're gonna do right after hitting the 1 to 3? They're gonna take a goddamn sell right off that 618. And it's doing it right now. Where's stop loss going? Right here, target a 1 to 2 or whatever. Oh my gosh. If you would have targeted a 1 to 2, it just hit TP. But I don't care, gang. I don't care what nobody says. This is crazy. Like this is gonna be a good video. This is gonna be a real pivotal video. And I'm showing you because it's like I like to teach people while showing them because experience is the best teacher. I can speak all I want, but we're both still human. So you're only gonna take most of the advice from experience. That's how we learn. So that's why I like showing like this. So that would have hit TP also. That's insane. But this video is about to end in 1 minute. I'm gonna wrap up this video here, and me and you, AJ, we're gonna finish our one-on-one. I'm gonna just send you another Zoom link, and we'll continue it there. All right.
Yeah, no worries.
All right, for sure, man. All right, but yeah, this was a good video, and I will catch y'all on the next.